Right, guys, good morning to you. Today, 16th of April, 2025. Crazy market with top with Kel. And let's just go into that. But before that, disclaimer apply as usual. Make sure you do your risk management. Okay, let's go to the market right now. And there's something very, very important to share with you today. There we go. Oh my God, gold is now at 3271. Oh my goodness. Oh, oh gosh, okay. All right, let's look at the gold first, yeah. Okay, guys, you can see this is gold price at the moment and it's really going insane, yeah? Okay, gold has already risen to 3272 as of now, high of 3275, okay? Now it's way beyond the pivot one level we mentioned at 3267. What's the reason for gold? Because the dollar is coming down. The US dollar is coming down. Let me see, I can bring the dollar to you. Just give me a moment, yeah? Dollar, wait, dollar. This one here. Okay, 1 minute. Oh dear. Okay, the internet connection is very bad, yeah? Okay. So you can see that, okay, the US dollar has continued to fall. Everyone take a look. The US dollar, this is where it is right now. The US dollar opening price was 105, and now the US dollar is 99.77. Okay, so you do a simple math here, everybody. So yesterday, gold, okay, I want to show you a simple math here. Okay, I just bring back gold again. Okay, so yesterday gold closed at 3230. 3230, yeah? Okay. So we do a simple maths here, yeah? Okay. 3230 is the gold price, all right, versus the US dollar, okay, at the price of 105, okay? So this is what happened as of yesterday, okay? Now gold is at 3270, let me easier, gold, and the dollar is now at 99.80. Okay, so everyone look at this, the maths here. If 3230 is equal to $105, so now gold has risen from 3230 up to 3270, while the dollar has depreciated 25 pips. So the question is, 1 pip of dollar equals to gold how much? Anyone want to try this? Oh, wrong color, yours. All right, anyone try this? Change to white color instead. 1 pip, cannot see it. Gosh. 1 pip of dollar equals how much gold? All right, anyone have your answer for this? Want to try? It's a simple math question, all right? Now, this is just a very preliminary way of calculation, so you get a good idea of this. It's not 100%, because you need to add other stuff, but just for the sake of just having fun here yourself, what do you think? Okay, 1.6, is that correct? So the difference is $40, right? So 40 divided by 25, you get 1.6. Actually, you're right, Joseph, you're actually right. So the thing is this is roughly there itself. 1 pip of the US dollar is approximately about $1.6 of the gold market. Okay, it's approximately there. So now, let's say we do a brief idea concept. I mean, I'll get a concept here as well, and then we put this guy to here. Okay. All right. So in the dollar, if it continue to fall to this price, which is 99.42, so it's another 42 pips from here. So another 42 pips, right? So another 42 pips multiplied by 1.6, example, it's another $67. So where is gold right now? It's at $70, right? So basically, right? Yeah, 42 times 1.6 plus 3270 3337 3337. So which means that gold do have the potential to really hit my 3355 level. All clear? All clear? Yes, correct. 3337. Yes, correct. Absolutely good. Okay, so that is the potential gold can go if the dollar can fall. Now, why the dollar is falling is because of the US bond market. All right, the US bond market itself is going down, the yield is going up because people are now really getting very worried about the US itself. Okay, all right, so let's go back to gold. Not to deviate too much from the topic. Apology on that. Okay, so guys, this morning I think you may ask this question, Kel. Well, this morning when you were calling for buy in gold, you also warned us about the KSI being red. So what does it mean? It's meaning that you can buy gold, but your quantity size has reduced and take profit as and when you can see. Because when you see KSI red, right, it doesn't mean you cannot buy. You can still buy, but just that your position is that you should go smaller quantity, and then after that take profit as you see them itself. When we say as you see them, we're talking about a 5-minute chart. So let's go to the 5-minute chart right now and take a look. Okay. Okay, so how you have traded this morning, right? Okay, this morning, your first entry will be here, right? This will be your first entry when you buy here. Then after that, it hit KTR +1, right? That's where I also book profit, right? Okay, done deal. Then after that, the market pulls back here, a red color candle. Do you short? No, because it's above OP. You cannot do that, yeah? And then the boys are all buying anyway. Then after that, there's a new breakout. And then you have this 4 diamonds. You put a line across it. And straight away, you see the market zoom all the way up when triggered the KTR +1 and +3 at the same time. All right. So with that as an example, okay, you can see this is where the market now is being resisted already. Okay, all clear, yeah? All right. So with that, the question is this: what's next? Now, to me, the gold has already hit KTR +3. There's no need for you to consider to trade anymore unless you really want to think that you're going to buy and keep under 3355. Okay. And I'm not very comfortable with KSI being red here itself. Because we can see in the previous example, when the KSI turns red, there was some selling in the market. Okay, all right. So we will take a look and watch this. We don't need to rush in right now. It's all over already. Okay, let's look at the Dow instead. This is where it gets very interesting. Now, the Dow, as you know, we have the Donald Trump impact last week where he basically reversed the market itself. And I told you guys, very simple. You just have to do a simple thing, is that take the 50% of this entire candle and you draw. All right. And that will give you the 50% marker, which is somewhere around here. Not drawn to scale, yeah, roughly, yeah. Okay, somewhere around here. And take this out. Okay, so you can see amazingly, right? This is the 50% mark, and the market really touched it and recover. So now the thing is this: if the Dow Jones want to come down, it will have to come down to here first to find a base level. I repeat, the market must come down to this point here to find a base level. If the market can stay at this base, okay, at this base, and then go recover, there'll be a strong buy up. Conversely true, if the market breaks below this base, then the next selling wave can be as low as today's pivot 1 level. Because today is an inverse pivot again. It's another inverse pivot again. So you notice, right, there's few days all inverse pivot. That's why the market range is very tight. When the market's inverse pivot, the market will be very tight. So this question will be, you'll ask Kel, then is this the elephant trade being triggered? Yes, of course. So the low got higher, which is normal for an uptrend. But at the same time, the KSI turns red color. That's not a good sign. So buy right itself, as long market goes up, you just stay long. But if the market ever go below the previous day low, which is like now today, then it's a sell. But one thing is that it's not confirmed yet until the closing price stays below the line. So if the markets don't stay below the line, this one is not a real confirmed elephant trade, but it's triggered already. So how to trade this one, right? Below OP, then sell, okay? Below OP, then you sell. Now it's still above OP, so do not sell much, okay? Wait for it come below OP, then you sell, yeah? Very, 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 very important, okay? All clear? All right, all clear, so I'll press number 2 right now. Okay, so this is the S&P 500. It also has the thing now. We have a doji directional day. We have a market below MA30. We have it below OP. We have it below MLP. And very important, we have a 4 diamond here, which is that you should put the level here as a closing price, right? So you draw the line at the closing price of the S&P. Okay, then you have your KCL level, the abdomen level. So as long as the market stays below it, then the selling pressure will kick in, yeah? Okay, the only thing is that now the KSI is actually red in color also. So you have to watch it carefully. If you're a buyer, take small profits along the way up. If you're a seller, then you just have to sell and hold your position for bigger profit. Okay, for seller, hold your position for bigger profit. Okay. Now, one thing why the market this morning gap down is because of this NVIDIA. NVIDIA right now is having issue to export their product to China. US has came out some law against them, so that will become an issue for NVIDIA. So that's why this morning the market actually gapped down. The other thing is, of course, Boeing, right? Boeing is now having lesser order from China because China say no more buying of planes from Boeing. So now the thing is this, the tariff war has gone beyond the tariff. It went to the point that, okay, the country itself tell the company themselves to, look at this, look at that. So of course, a country is bigger than a company, right? So if the company doesn't really follow, then of course the company will have to get his hit. So that's why I think this is going to happen. More and more different companies will be restricted to do some trading with some people. And then that is where the things get very painful for all of us, the consumer in the market. And this is why I think that now the stage has moved from country to country, become companies to companies. All right. So that is one thing to watch out for, S&P 500, if the market actually goes down. The next market is NASDAQ. The NASDAQ also have this same thing. It's an elephant trade already, the downside elephant trade. The market has went up initially, but the KSI has turned to red in color. So same thing, it has broken below the previous day low. So if the market do pull back, watch out for this. The market, if it breaks here, which is at 18,384, right, that will be first target for sellers. Now, if the market break this level, oh my God, look at it. The next thing, if it breaks, for today's support is 17549. But the real level looking at is 17086. Wow, this is going to be crazy. So which means that if the market loses 18384, the market can go all the way down to 17086. Yeah. So this is actually very, very dangerous for traders. You have to watch out for that. Yeah. Okay, all clear? If all clear, I press the next number. The next number would be number 3, right? Yeah. I already love to have my screen on beside me. Then I can do my sharing easier for me. All right, guys. Okay, so that will be all. Okay, do one more foreign currency first. Yeah, I want to show the currency market, the dollar yen. All right, you can see the dollar yen is now hovering around this area. All right, hovering. You can see that it's not going to drop further, but still the market is still full of sellers in the market. So what to do is that the dollar yen, I think it will test later this number, 142.248. I think you'll test around somewhere around here. Yeah. So that's 142.92, right? I think the dollar yen later will test here. Why? Because you see the market been going down, but the lows are getting higher, but the boys are selling. So by default, usually like this, the market will eventually come down and break the stops here itself. And then that will trigger off the selling wave the market, and the boys will come in to take them out again. So the typical dumb down to push up, thinking like that. Okay. All right, that'll be all for today's market talk. We'll go into the market revision shortly. Let's take a short break right now.